Thank you, everyone, for being here. I'm sorry we are the last panel. It's very hard to follow Dan Yergin, but we will try to make this uplifting as possible. And congratulations to the governor and his team for a truly remarkable conference. Yeah. So how many of you have noticed the governor used the word investor several times throughout the last few days? Yeah, a lot of hands raised. So how many of you were here last year? How many of you think the conference got better? Wow, amazing. Well, we're going to close it out pretty strong with this group. Everybody loves the word venture capital. It seems to be the sexy thing, although maybe not today's world. But I think we've done a pretty good job bringing some of the world's best venture capitalists, or I should say newer models of venture. This is a really exciting panel, and we appreciate you being here. So without further ado, I'm going to introduce the four of them. So here you have, and fresh off a plane at 2:30 in the morning for one day, Peter Corcel, who runs I Squared's new $40 billion firm. He runs their venture arm. Then you have Kelly from NCAP, who runs their energy transition fund, a 40-year-old private equity firm, $40 billion, runs their energy transition strategy. And then you have James McIntyre, who runs part of the Moore Capital family office on the private market side. Many of you may know Moore Capital is somebody who is well known in the state, Louis Bacon. He owns a Heli Ski Lodge. So he runs the private deals and focus on energy transition. And then last but not least, we have Brian Talkman as somebody I know from a nonprofit advisory board that we're on called Stand Together, and then he runs Trust Ventures. So we have an eclectic group. Some of them actually don't want to be called venture capitalists, so we're going to get into that. So I'm going to start with my friend Peter here, fresh off a plane from Miami, flew in for this. So why don't you tell them a little bit about your background, because you weren't always a venture capitalist. So tell us how you stumbled into this.
Thank you. I had to turn it on. That would help. Thank you, Ellie. Well, I started off actually in the U.S. intelligence community. So I went to Georgetown and spent about 5 years at CIA as an analyst at Langley and then overseas. So really eclectic, to be sure. And then started an energy tech company with the advice and backing, among other people, of the great Dan Yergin. So I met Dan in 2005. One of the best things that's ever happened to me. And sort of built that up. So I was really an operator. Had a few exits over the years in a couple of different sectors: cybersecurity, fintech, marketing tech, and I started a firm in 2015 with my partner Larry Kellerman, who is a former sort of renowned Goldman partner in the energy investing space, and was really a fundless sponsor. So we did a number of deals, and then we sold the firm to I Squared in 2019, and that's kind of how I stumbled into this.
So some of you guys in the room came down to CERAWeek thanks to Dan. We had quite the presence down there. And many people call Peter Dan's protege. So we're happy to have you here.
I don't know that Dan is the only one that matters.
I will call out one of the commissioners in the room. He said to us, how did Peter get to be the youngest partner ever at I Squared? So explain to people what I Squared is and what you do versus the rest of I Squared.
Okay. Well, I Squared Capital, and the I stands for infrastructure, is for all intents and purposes Morgan Stanley Infrastructure Partners. In the financial crisis, our chairman and managing partner, Sadiq Waba, took his team and left Morgan Stanley. He had been the CEO and the CIO of that business. And he set up I Squared as a new, independent, employee-owned operation. But the way it had been structured at Morgan Stanley was, it was about a third balance sheet capital and 2/3 outside LP capital. So Sadiq had a number of great LP relationships right off the bat. So they raised $3 or $4 billion initially in a Fund 1. They sort of caught the infrastructure wave. The performance has been very high, 22% returns for the first fund, kind of, on risk-adjusted basis, really, really quite good. And then they raised a $7 billion fund in 2018. It was on the back of that they acquired my firm with Larry. And then they raised a $15 billion fund last year. So that's Global Infrastructure Fund 3. We also have a credit fund that's more of a mezz credit fund. We have an emerging growth markets fund that does the same thing as the main fund, but we do it in non-OECD countries mainly. And then we have the tech fund, which is something I started after I got to the firm. in a nutshell, we were noticing that the main fund portfolio companies, I Squared's about total AUM is about 40 billion. We noticed that a number of our main fund companies were really investing in and embracing, operationally embracing innovative technology. So we established a pool of capital within the firm to sort of cherry pick and invest in some of these subscale but growth stage companies that either enhance or threaten to disrupt the traditional infrastructure verticals.
Thanks, Peter. And it's definitely a relevant model for those of you who know venture capital is struggling right now to be able to have that infrastructure capital behind it. So Kelly, in that spirit, I want to turn to you. You wouldn't normally be on a venture capital panel, but explain to us, and those of us on the permanent fund board, half of us got to know NCAP when they actually came in December to present at our board meeting. And we asked them back in December, can you come give the same speech you just did at the public board meeting here? So we didn't really know if they were going to come, but when we asked, they came. So it's a really proud moment for those of us for the permanent fund because we've gotten to know NCAP. But explain, like Peter, what NCAP is and then specifically what you do.
Great, thanks, Ellie. And as Ellie said, NCAP is a 40-year-old private equity firm based out of Houston, Texas. We started in the upstream oil and gas business with the founders and had very successful, they're up to 11 out raising Fund 12 right now. And then we moved into the midstream in, about 15 years ago, rather. And then my three partners and I started the Energy Transition Fund at NCAP. And so the NCAP model, private equity, not VC, we back teams that go out and either on the upstream side, they're investing in upstream assets, they're best-in-class teams, they create development pipelines, and they create the assets. And we've replicated that model upstream, then to midstream, and now on the transition side. And what we've done, which is a little bit different than some of the other private equity firms, is in each of those verticals, we've got people that are experts in that field. So the upstream guys, they know how to drill, they know who the teams are, they know how to go through the different teams and opportunities we have and figure out what are the best ways to deploy the capital that our LPs have entrusted us with. Same thing on the midstream side. They actually pulled some people that were midstream consultants and created that business 15 years ago. So when my partners and I, which we were already formed as a team, the four of us actually have a long history of working together. We were all at Enron together, stayed at Enron through the bankruptcy, and then went to do different things. After the Enron bankruptcy, I actually went to work for a family in Houston called the Zilka family, who had taken their oil and gas money and started in the renewable space. So I've been doing what was called renewable for so many years and is now called transition since 2002. So for quite a long time, and my partners have been doing the same thing. One of my partners was the CEO of First Solar, which is a panel manufacturer in the US for solar panels. So we are experts in renewables, energy transition, and I was talking to Dan Yergin a few minutes before we came in here. What's your definition of transition? And transition for us is a little more narrow than Dan's definition, which is transitioning, across the last 200 years from, coal to gas, et cetera. But ours is really anything that decarbonizes the energy supply chain. So it's not just renewables, and that's why I say, I started in renewables, which was wind. If you look at this 20 years ago, it was really only wind. Solar didn't make sense. Those were $400 a megawatt hour PPAs. So it was wind, then we got solar. Solar started to make more sense. But now we're looking at molecules as well. So we've got a company that actually takes waste strappings from wood plantations, gasifies it, turns it into syngas, into methanol, and then ultimately to a negative carbon intensity fuel, renewable gasoline, which is something that we export to Europe. So we've kind of seen the whole gamut of, over the last 20-odd years, of going from renewables all the way to anything that really is decarbonizing the energy space. So I think when you look at disruption, and if you say that's what venture capital is, and that's what we're looking here, the way that we run our model at NCAP is a bit disruptive. We don't put one energy fund and try to do upstream, midstream, transition within that fund. We take each fund and we have our own pool of capital. We go out and raise money, specifically funds in each of those verticals, and put experts who understand the business, who've actually been in the business, in those funds to run those funds and deploy the capital. And that's where we are now. We're out in the midst of raising our second fund. INCAP writ large is about a $40 billion AUM private equity firm.
Thank you, Kelly, and thanks for coming back. All right, James, so let's talk about what it actually means to be a family office. And it's not as secretive, and the word billionaire doesn't have to be scary to people or threatening capital. Explain what Louis Bacon pioneered and why he is now making major moves in the private sector when he's really famous for being a hedge fund investor, and most people aren't able to make the transition of public to private. So what were you brought on to do, and today what does your portfolio look like related to energy transition?
So, well, brought on is an interesting way to put it, because I've been at Moore for over 17 years now and have, transitioned through, not to use that term in too many ways here, but I transitioned through a number of different roles. So investing first in emerging market equities and a lot of metals and mining on a global basis. And so in the time that I've been at Moore, we've sort of surfed different markets, is one of the ways one of my mentors put it at Moore, to the places where we felt on a macro basis the world was moving and we would have an edge on how we should look to benefit from and make money out of all of the different change that's happening throughout the world. And so I actually got into traditional oil and gas through master limited partnerships, investing for Louis there outside of the fund due to the tax nature of those assets. And thankfully sold out in early 2014, not because I predicted the collapse of oil, but more rates had compressed so much. And so after that was kind of finding, okay, what do I do now? I had an allocation for European equities, was trading lots of autos. I was a generalist there, but spent a lot of time in the auto space. And when Dieselgate hit, that was really kind of our what we thought was a canary in the coal mine for eventual transition to electric vehicles. And if you kind of mapped, and this is where the macro kind of came in, mapped how important the auto industry was to Germany and saw what China was doing with electric vehicles and pushing to really seemingly dominate that space, and they still are looking to dominate that space. We felt the only way Volkswagen's getting out of this is by pushing hard into electric vehicles, which will then sort of be the domino for the rest of the world. So we have the view that, this is getting to the portfolio, that we will eventually, whether the consumer people like it or not, electric vehicles are coming, and the reality is, our grid is not anywhere close to capable of handling the onslaught of all of these cars. And so our investments are largely based off of what we see as an inevitability for the product coming out, and how can we actually live within the realities of of the infrastructure that we have in place, and how can we quickly get there to actually bring these on. And so one of our portfolio companies is a business called Ample, which is a battery swapping company. We were actually able to invest in that in the early days, largely off the basis of no one wanted to give them money, as we were talking about, because of the fabulous failure of Better Place. No one knows it. It was a venture capital business, raised $850 million, and within 12 months was bankrupt. So no one really wants to follow that example if you want to keep your career. So, but these guys, obviously, we felt took a very different approach to it. We're not holding multiple, different types of battery, which is working capital intensive. It wasn't $1 million to put in a facility. It was under $100,000, much smaller. Doesn't need trenching from the utilities. And so when you look at, how do you roll out a fleet with charging, the math that we did said that would never actually be economic. But if you roll it out under a battery swapping solution with modular batteries, you actually can make it economic. Charge during the day, swap the batteries as they come in, have a 5-minute swap, which is equivalent to how long it takes to fill up a tank of gas. And you can actually do this. We're not saying charging isn't relevant, by the way. We actually need a lot of charging infrastructure, but this is just one piece of the puzzle that will help to accelerate the rollout of electric vehicles. and another, and a lot of other of our other investments are grid facing and trying to improve visibility on the behalf of the utilities to understand how this rollout is going. Because if a consumer buys an electric vehicle, overall demand at that household goes up 30%, peak rate goes up 2x. Utility doesn't even know it happened, which was kind of unbelievable to me. But we're investing in technologies that will give them that real-time knowledge alongside, let's say, a consumer who also just got solar and now their demand went down 50%. So long-winded way of saying we try and look at where we think the world's going, what are the realities and the impediments, and then how can we invest in the technologies that will help to get around problems and not get stuck with regulation.
Yeah, super innovative. All right, Brian, you are going to energize this crowd. So I've known Brian for many years. He's been here many times, and we appreciate him coming back. So your model is truly unique. I don't think I've ever seen a fund with your capabilities. And so explain to people, while your AUM might not be that big, what you do differently. And for a state that is arguably strangled by the federal government many times, I think people will agree with this. What is your model, and why may Alaskans like what you're doing?
Yep. So I think this says a lot about the crew that we're hanging out with, that my little 500 million AUM fund is like, we're peanuts here. So we're a venture capital fund that invests in companies that are running into regulatory barriers. So what we see is maybe take yourself back in time, the first time you heard about Uber or Airbnb, and you said, like, can you do that? Can you just get in someone's car and exchange money for a ride? There was a question like, is that legal? Was there a regulatory framework built for that technology? And in all those situations, there wasn't one. Those regulatory frameworks had to be built. And a lot of people look back and walked away from investments in those generational investments, right? I mean, if you had been able to put 100 grand in Uber, in 2014, you'd be on a yacht today calling in. And so we see that opportunity presenting itself many times over in a lot of different industries. We see it in energy, we see it in labor, we see it in healthcare, where the innovation, the technology has moved faster than the regulation. The regulation is a snapshot in time. And the regulator cannot be blamed for knowing what they knew today and not predicting the future, but we're still at an impasse where that technology might not be able to come to market because there's a regulatory gambit that they need to get through. So we use a team of lawyers and lobbyists in-house to our venture capital fund that allows us to diligence those companies, help us understand what is the regulatory framework they need to go up against, and if we think it's something that can be adopted and improved to bring that technology to light, we invest and we help change those laws. We've changed laws at the state and federal level. We've made it, you take Florida, so like online eye exams, I think is a great example that could be applied in Alaska as well. Telemedicine gives you access to lower cost healthcare anywhere you are. And in a state as large and distributed as Alaska, not everyone's going to be near a optometrist. They're not going to be near the doctor they need to get access to. And that was the case in Florida. There was a law that limited the ability to get an online eye exam for the 22 million consumers there. We saw that and we said, this is great, low-cost, accessible healthcare. We invested in the company. 6 weeks after we invested, there was an amendment to that law, and now 22 million consumers have access to that technology they didn't before. 22 million consumers at $50 a pop is $1 billion market. So for us as investors, we love that. But for consumers, for the people who actually use that technology, getting access to that healthcare, access to lower cost energy, access to new job markets, those are things we look for. And for us, it's a win-win. And that's the model of our business.
How many states have you now changed laws?
Oh, it's a good question. It's more than you can count on your hands. And we worked very closely at the federal level. And sometimes it's sometimes not changing laws. Sometimes it's working with the regulators as they're developing laws, saying, hey, this is the way it's written today. Doesn't make sense because this new technology is just over the horizon. Let me show you what's happening at the seed and Series A stage of venture capital. And they're like, oh, we did not see that coming, and we modify and we kind of mold that as it gets developed, and that's a sweet spot, right? Is seeing where it's coming down the path, seeing proposed language in legislation, and saying, hey guys, maybe you should be aware of this. And usually everyone goes, oh yeah, that makes sense.
No, and that's huge because actually, even in the business that I was talking about before, and would have been great to have met you earlier, but we did hire someone specifically to look at that, and as the bills were being written for funding of charging infrastructure, battery swapping was actually left out of it, and it was not because anyone was trying to actually exclude them. They just didn't write it in a way that actually would address the fact that the battery was moving around. And so having someone to actually make sure that that was in the law was super critical to us actually getting funding from the government in California.
Yeah, and on that note, Brian, you have a company that I know you've worked with several members of the governor's office. Why don't you tell them a little bit about what that is and how Alaska may be well positioned once the law is changed to be the first mover of it?
Are we talking about nuclear energy or energy storage?
Nuclear.
Yeah, so I think the nuclear panel did a great job yesterday talking about what kind of technology exists in the SMR, micro reactor industry. The only thing is, it's not new technology. This is not a space where someone created a technology last year and now we're racing to get to market. This has been around for 40 years. This is kind of the innovator's dilemma. You've got very large businesses that have been built on technology that's 50 years old, and people keep buying it. So do you disrupt your own business because there's a new technology that's going to cost a lot of investment and a lot of time, and there's not an absolute guarantee that it will be approved by the regulator? No, you know what? You're making billions, you keep going. And that's where the venture capital and the early stage startup industry really thrives, is saying, we're going to throw Hail Marys. We think these are the things that are going to really change society, and we're willing to make these big bets. So we are investing in a company called Oklo that makes a small modular reactor, 5 to 20 megawatts, that can deploy in a Connex box, move very quickly, and get really low cost. I mean, fractional compared to especially what's being paid in Alaska when you burn diesel, and provide that energy solution to communities just like this. And when you solve energy, you solve a lot of other things too, right? Energy is really the kind of the linchpin of healthcare. It's a linchpin of data and the ability to AI technology today. I mean, you look at one of the most throttling components right now is how are you going to power all this computing that needs to be created to run these solutions that improve our lives. So yeah, nuclear I think is. I also, to maybe caveat all of this is, I think all of these things that we're talking about are pretty complementary, right? You got to have baseload electricity. No one wants to be in a hospital when it's that's powered by solar and you gotta have surgery at night. That's not a bet I want to take, right? But I do think that renewable provides amazing low-cost energy in the right situations. You complement that with baseload electricity for all your basic needs, and you've got a pretty sweet little package.
You brought up a really good point. Peter, I'm going to come back to you. So for those people that don't have an energy background, I have no energy background. I sat here a year ago in the audience and was trying to learn. So Peter, you have a really interesting company called GridPoint. Why don't you walk it through? Because for the average person, they're thinking, what's in it for me and what can I do and how can I have my part in the world? And truly, one of the best ways to decarbonize may be in your own home. So why don't you talk about what GridPoint does and some of the major partnerships you've been able to enact with that company?
Yeah. Thanks. And I want to say, Brian, those were very impressive comments, and it illustrates the bridge of venture capital, right from the early stage big bets to the kind of de-risked scaling capital to help propel the more mature technologies. It's on the other end of the barbell of the nuclear company, and I didn't catch the name. What was the nuclear? Oklo. Oklo. Yeah. On the other end of the barbell is really active, sort of actively managed energy efficiency, right? At the end of the day, nobody wakes up, no business owner wakes up and says, I want to buy electrons. That's what I want. I want to go buy electrons. We want hot air, cold air, motive force, illumination, cell phone charging. We want various end user applications that we require electricity to provide. And so, the way the system, right, which was really set up to be ubiquitous, reliable, and affordable, going back over a century, it sort of set up this all-you-can-eat buffet of electrons at the edge of the grid, at the meter. And so what a company like GridPoint does in that whole sector is really at the meter's edge, at the water's edge, between the business or the home and the utility grid. And GridPoint is sort of an operating system for smart, sustainable buildings. It's about 20,000 buildings in the US. It's in every Walgreens, it's in every Chipotle, it's in every Target store, this kind of stuff. So it's really focused on big box, small box, multi-site retail. And it is a SaaS-based, it's a hardware-enabled SaaS model. So it's a sort of a zero money down subscription-based model that immediately saves money from the first day, the first month for customers. And it does that by optimizing consumption within the building. A lot of that is HVAC, some of that is lighting. In restaurants, there are a number of heavy uses. And it sort of arbitrages the grid, off-peak, on-peak pricing, demand response events. So, at the end of the day, when you think about these buildings, and, I'm trying to remember, I think it's 40% of carbon emissions come from buildings themselves. These buildings, you can either produce power on site, like solar in the hospital that we don't want to be in at night, or you can either produce power on site behind the meter. You can store energy in a battery. You can actively measure and control load through technology, which is fundamentally what GridPoint does. And you can replace energy-consuming things with more energy-efficient versions of themselves. So like classic energy efficiency upgrades. And so there's a lot of IT going on at the edge of the grid that is optimizing the demand side of the equation. And I think that is a big thrust of what technology can do. And then nuclear and better solar and all of the generation stuff is the other.
It's super interesting. Kelly, I want to go back to you. In your portfolio, you are definitely at the cutting edge given the size of what you do. What are some of the key themes that you are seeing that, for those of us that really want to learn, I've always said the best way to learn is go talk to the top investors in this. So what are you seeing today?
Yeah, in the IRA, the Inflation Reduction Act was mentioned earlier today and probably throughout the several days of this conference. We really do see, while it's old school, they're meaning wind, solar, and now battery storage, which is not as old school, but there's a huge runway. There's just going to be a lot of that needs to be built. Is that the only thing? No. I love the small modular reactors, and we were talking, Brian and I were talking about that earlier. That's a little bit of the difference between venture capital and private equity. So for venture capital, he doesn't have a certain time he has to get out. It's a great bet, but for someone who we're a 10-year fund and we really look to exit within 3 to 6 years, it doesn't make sense for us. But at some point, we would love to make an investment in the SMR development type companies. But what we see out there right now, and I'm sure, again, not everyone here is an energy specialist, but the IRA allowed for both the production tax credit and the investment tax credit to have a known lifetime, which is the first time in the renewable space that we've seen that. It's always been, okay, 2 years of this, and then we'll wait and see, and it's been a very lumpy development and commercialization of those renewable strategies. So now we know for the next 10 years that we're going to have those credits. So it's really changed the landscape of renewable, meaning wind and solar development. But then you look even further, they added a $3 per kilogram credit for hydrogen production. And essentially, hydrogen is one of those things that I was on a panel with another woman a couple of months ago, and she said, I looked at hydrogen 20 years ago, and if I'd made that bet, I wouldn't be sitting here with you today. So it's one of those things that, can you be too early? Yeah, you can be too early. And there's still a question if we're too early on hydrogen. Well, the $3 makes a big difference, and everyone's trying to attack it, and we're waiting for some rules to figure out what green hydrogen, what that nomenclature really means. But that's in the bill as well. Carbon sequestration, there's a credit for that. There's a credit for manufacturing panels. So there's just this amazing landscape of what can happen on the transition space. And as I was mentioning before, the molecules, whether it's renewable gasoline. So it looks like what you've seen before, gasoline. And those are drop-in fuels. So your gasoline will just have 5% or 10% or 30% renewable gasoline that has a lower carbon intensity, and de facto is then reducing the carbon output of what a traditional internal combustion engine will do. So there's just a lot of investment that's going to happen. And I agree with the comments, again, going back to Dan, can this happen in 10 years? No. This is a transition that's going to take 20, 30, 50 years to happen, but it needs a lot right now to get to where we need to be in 50 years. It's an amazing amount of investment that's going to happen now in the next 5 years, the next 10 years. And it's really a very interesting playing field right now.
Okay, so James, you have a couple companies also relevant to Alaska. So really disruptive models. Explain what they do, and you can walk through one or two of the examples.
Well, let's see. So one that would probably be helpful in some of the more rural communities is a company called PayGo, which does a software that allows for prepay utility usage. And it's much more popular and prevalent in the UK, not so much here in the United States, but oddly enough, the small programs that do run in the United States have off-the-charts customer reviews of it, and very, very happy users. And so that's something that gives the consumer the ability to understand how they're using their energy. They only use as much as they really, obviously, as they need. They don't overuse it. One of the huge problems that the utility space in general is going to have is just unpaid bills and how much that's accumulating, and so that it avoids the bad debt problem. And so, for communities that have very high cost of energy now, that is difficult to address. Giving the consumer more knowledge on how to use it, and not in a crazy way where they have to buy a $300 Nest meter, which they just can't afford, but a way that can actually be rolled out by the utility themselves is something that could be used in some of the communities around here in Alaska that we've been investing in.
All right, Brian, I'm going to put you on the spot. So you've had a couple companies come into Alaska and then leave. So obviously you live in Austin. I remember one a couple years ago, and it was, as the governor talked today, he mentioned about drones and how he wants us to become the drone capital. But you had an investment that did their pilot actually here, but it wasn't a drone company. So explain why Alaska may be a great, advantageous location for companies of your size that really need to be this pilot location. And then I know today you met with the DOE and the Arctic Innovation Office. So what are you seeing in terms of the right types of companies that are well positioned to have, I'd say, utilize Alaska for a pilot?
So it's amazing across how many different industries I talk about Alaska as a great test bed. I think just the scale of Alaska really lends itself to that. It's everything from, we've got this vast distributed population where energy costs are high, and we just like, how do we solve for this, right? There's a lot of different ways to solve for it, but this creates many more opportunities when you're burning diesel as high as what we were saying, Kelly, like 50 cents, you're right? I mean, it's that actually creates opportunity. And so we've seen that as well as with logistics, the ability to move materials to consumers. As you see and you hear a lot about drone delivery, right? Little helicopters dropping little packages around town. But your range is usually a couple miles and a couple pounds. Here, you have a much bigger test bed. You need to move bigger, heavier products, much longer distances. So one of our companies was experimenting with attaching wings to boxes, basically. Like picture an Amazon box with a set of wings on it, and it's a controlled projectile that lands in a field. The ability to deploy a chute at the last second and drop, a case of milk and some bread and all the things that you want delivered, like on a pretty regular basis. And the great part is those are two very different problem sets. But Alaska is a great test bed. I mean, honestly, I think it's a great test bed for a lot of things in venture. The earlier stage where people are trying to solve big problems, say, where do I try it first? And we have found that in the lower 48, Texas and Arizona, Governor Abbott and Governor Ducey, their teams have been great advocates. They've said, hey, we want to be the advocate for technology. And I've heard it from Governor Dunleavy here that he said, look, we want to help these technologies get here, and finding ways, what are those pathways in for whatever the technology might be, seeing like we want to be partners for innovation. That's huge for us, and I think there's a lot of venture capital firms out there that are invested in many different things. Say, all right, where are you going to put your product first, right? Where is the regulatory environment going to allow you to do this game-changing thing? And we look for places like Alaska to say, yes, like we are here, and the governor's office has they've been awesome. They said, look, what do we need to do? What are the things that we could do to help get these companies working here tomorrow? We love hearing that. And it gives me a lot more courage to make investments, because I say, I think I know where there's a path for you to put your first product down. Because I have a lot of companies that don't have $1 of revenue yet. Great ideas, but if you can't put it in action and prove that it works, it's pointless.
All right, so you bring up a relevant point. There's a famous quote, ask not what you can do for your country, but what your country can do for you. So I'm going to ask all of you this. The reverse. Thank you.
I think it's the reverse, but
What can Alaska do for you? And Brian, I'm going to start with you. You've gotten to know it. And I think you bring up a really relevant point. Usually as investors, you actually don't work with the governor's office or probably the West Wing. What makes your model very unique is how close you work with governor's offices. Frankly, we've somewhat modeled what the governor's doing off of your strategy. So what would you say to the advice to the governor? And there's many legislatures in the room. There's, just people that are residents of Alaska. It's actually not only Alaskans here. The demographics here, it's great to see people come from around the world. Well, now that you've gotten to work with the governor's team so well, what would you say Alaska can do for you or other companies to make this the most attractive test pilot ground?
Yeah, so we're hearing it. I love the words. I think the governor's office is saying everything we want to hear, and it feels like it's moving. So I'm very encouraged by that. Ultimately, like the things we talked about, permitting for different energy solutions. That's a huge deal. Putting it in place and being able to get the first companies operating and show that the proof of concept actually works and that we can adapt the regulation as fast as the technology moves. Those proof points are really valuable, because ultimately, put yourself in a founder's shoes. A product manager, an engineer who has a great idea, they rarely understand how the regulatory machine works. They don't know who to talk to. They don't know how to access the governor's office. They don't know that they can make that call. And I know, because I was there. I founded a company in modular construction. I was building 22-story buildings in California, and I couldn't build over 4 stories in Texas. And it was my home state, and I was like, I don't know what to do. And I very slowly and painfully learned how to work with the regulators and the legislators. It was hard, it was arduous, and I barely made it through. A lot of founders don't make it through. They don't know that there are open ears to communicate with. And so, I try to be that conduit as best I can. I look for those companies and say, hey, I'm gonna bridge the gap here. So it's not easy, but I think investors is the right approach, right? Because it's like a many to few to many kind of relationship, and that conduit needs to be built. So I think this week has been a great example of that.
James, what would you say?
So we one of the reasons we're investing in this space is because we fundamentally believe that the utilities have changed in their mentality, that they do actually have to invest in technology. They can't. So I'm caveating my answer here a bit but they can't just go with the old adage of, you walk in and say, hey, I can show you a great way to save money, and it's the fastest way to get kicked out of their office, because they want to just put money in the ground and rate base it. So that being said, while we think that they see the need and will be willing to adopt technology, being able, just as Brian just said, to show that, okay, when you do roll out this software, the savings of the consumer really was 20%, and and the consumer acceptance of it was very high. Or let's say the new smart meter that we're building in partnership with NVIDIA and Microsoft, when we actually did put it into the home, the chip actually did give us the real-time read on everything going on in that home that we expect it to. And so this is why it's much better than. And so getting those pilots up off the ground, there's probably the worst sales channel to have to sell into. No offense to any utilities here, is a utility. It's just so difficult. And so, dealing with, the top of government that can help put you in touch with the right people to kind of put your economic pitch in front of them is very helpful.
Very relevant. There were other investors up here the last week, and I know the governor's office can tell you probably the number one request was to meet with the utilities. So it's not something you would usually hear an investor ask for, but it's great to see that. And I know, AEA and the governor's office has been really great. Kelly, I know that, some of the things we are talking about, the technology today may be further out, but the governor passed his carbon management bill. There was a bill signing at the first day of the conference. And he asked you, I overheard the conversation about biofuels and biowaste. Right. What would you say for a state like us that has as much timber as we do, is that a relevant technology today from what you're seeing? And does it always have to be a large scale project, or is there ways where you can put many different units in order to make your numbers work?
Yeah, and honestly, I was, when we were talking about that, when I heard about it, I think it's really interesting. When I flew in last night, and I haven't been here, I haven't been to the state of Alaska before, it is an amazing panorama, and just so much, so many trees, and so much, in my mind, wood, right, as it relates to biomass, because in fact, we are creating syngas and methanol and renewable gasoline out of gasified wood waste. So I did see it as a big opportunity. Scale is important, and I don't know enough about the grid here, because I thought you would ask me the same question. What can the government do for you here? And I think on that front, it's...
Well, he would like a bio waste plant, so that's why I'm asking you.
But I think it could be distributed, but that model is really, when I looked at the map that was put up, I mean, in my mind, it just was, okay, we take the wood waste, we gasify, we turn it into maybe methanol. Some syngas can do a lot of things, and send it to Japan. I mean, that would be an amazing market. Just trying to understand the pipes and how you actually sequester the CO2 is interesting. One additional thing that I think, and this is something they did in Texas, and they're sliding a little bit right now in the legislature with some bills that they're proposing, so it's not all positive there, but they've created a huge business both in the oil and gas and in the renewable space, and they subsidized the transmission. So you've got to have transmission, you've got to have a grid, whether it's 235, 345, whatever it is, what level you need, and then distribution is more enabling all your residents to get access to the electricity. But for project use, you really do have to have a good grid. But when I look at, I'm quite keen to learn more about how biomass might work and how we might work with the state of Alaska on that front, because it does seem like an opportunity. And I mean, just again, flying in here, seeing that there is a lot of different ways to use the resources that Alaska seemingly has to bolster the economy here.
All right, Peter, take us home. So, it's been interesting. The governor's office doesn't have an investment team. So one of the things we always say is send your pitch books to the governor's team, and they'll take a look at the companies and say what's relevant to Alaska. And it's funny, they're now so used to, where's the pitch book? Who are the speakers' pitch books? And I'm like, okay, we're getting there. So they've gone through your portfolio, and there were a couple companies, as you know, highlighted, Mainspring Energy or Atlantic Power. Explain to everybody here what they are, because they are truly relevant to what the governor's vision is for energy transition. And then the second question to that is, I would ask you all in kind of your parting words before Peter goes out, is as an investor, what can you do to make this easier, right? So imagine you're a governor's office, there's no investment team, this is not the permanent fund. How can we bridge the gap between policy and investing? Is it a language issue, such as pitch books and ESG reports? But think about that, because I'm gonna ask you guys as closing words. But Peter, come to those two companies first.
Great, and then I'll touch that question, and we can go back down the other way. So quickly, and I learned this morning in the breakfast, thank you for inviting me, it was terrific. Tarana is another one of our portfolio companies, which is in the broadband wireless space, but it's great for really rugged environments, long distances. It's very resilient. non-line of sight. And I realized this morning, I was texting the CEO, have you ever thought about deploying in Alaska? Because Toronto would be a wonderful non-energy, but wonderful company for Alaska that's in our portfolio. Mainspring is a linear generator. It operates on natural gas, a 250 kilowatt, 12 cents levelized cost per energy, going down to 9. But you could run a whole supermarket 24/7 off-grid on natural gas. You could also gang up a few of them and have a megawatt if you ganged up 4 of them. And it bridges to hydrogen. So basically, it can run on a number of biofuels. So it starts with natural gas and can then bridge over. So it's basically a large, clean, quiet, high-capacity generator that bridges. And those 2 companies, Mainspring and Toronto, I think in our portfolio would be of greatest applicability. GridPoint could be of applicability, but there are not that many sites in Alaska. And then Atlantic Power has a big biomass business. We own a number of biomass plants in the States. So certainly we could be applicable there. To your second question, what could the state do? Because I was thinking about that as we're going down the line. All these companies, and Brian spoke very well about the binariness of changing the regulations in certain instances and unlocking a market of demand. All these companies are trying to figure out, how can I marshal limited time, limited resources? I'm under a lot of pressure, these venture-backed companies, and get a win with revenue. And so if the governor's office, and this would leverage the fact that the executive is so well integrated, that the governor appoints all of these other positions, and they're all singing off the same sheet of music. If there were kind of an accelerator for adoption, we're working, say, with the Chamber of Commerce, that local utilities, that the governor's office could marshal, could sort of aggregate some demand and have a program and say to these companies, Alaska's open for you. We're going to facilitate your path to revenue in Alaska, because it is far away, it is more sparse. But I think a very clear program based on speed to revenue and packaging adoption we're happy to talk more about it. I think it's a good idea.
Oh, I think that table will be in contact with you, so thank you. Kelly.
Yeah, I think it's along the same lines what I would suggest, because one thing, at least from a private equity perspective, I don't think we know enough about Alaska, about what the resources are here. And so it's a discussion. It's a back and forth. It's, okay, here's my concept. Who is the point person who can either has the information here in Alaska that can say, that doesn't really work that way, because this is the route and here's the roads we have, and that won't work, or this is the season for that, and so that doesn't work, or this will work. So it's that back and forth. I have the idea. I have a team that does this. How can I deploy that in Alaska? So I need someone in the administration to be my point person. That person may not have the answers, but they will get the answers. They will be working with us in a team-like collaboration.
Sorry, I'm just going to parrot exactly what, but I mean, I think I made this comment to you, Ellie, before too. Giving people and investors like ourselves an idea of what Alaska has, what the resources are, what you're trying to do. I mean, the meeting that we had this morning was very helpful in, for us as we're going out and meeting all of these different companies, if we're able to map to, okay, Alaska would be actually a very great partner for running, especially in early stage venture, running pilots, because we know we can get to the top of the governmental chain there, and to point made, get to the right person to actually quickly do that. That's extremely powerful, and it's only when we actually know what it is that we can actually start putting those things together. So information, frankly, it's information, and then tying that to, yes, we are willing to actually act, and more you'll have more examples of how it worked as you kind of get further down the road, and then it just becomes easier to get people like ourselves to want to come here, understand things, and then when we go off and meet with all of the different companies throughout the world, we then know, okay, one of our great testing grounds is there, and we can quickly plug you in.
Well said. It's really a partnership. Okay, Brian, you're the master at this. So.
All right, so I've got it. The answer is, TSA pre-check. So we need innovation pre-check. And that's something that the governor's office says, if you have a new technology, come with us. Our pre-check office helps you determine what is the regulatory framework you're going to work with, and we're going to get you introduced to the right people. And while I'm a little biased, I think the early stage companies need it the most, right? You've got billions of dollars, you already know who to call, it's easy. But I think bias towards the younger companies, say, hey, you got first technology coming to market, let us help you get it to the hands of the consumer.
Well, I want to thank our panelists. There's a question here from the audience about how can you engage. They are all here the rest of the day.